Okay, hi, welcome to another session of our trading here at InTradeVest. We're going to show you a few things today. First of all, our disclaimer. This is a hypothetical trading. Don't trade with any money that you could potentially lose. And the results we show you are not necessarily achievable by you. So trading, you can lose your money. Let's go over to our trading screen and show you today's trading. We took trades in both the ES and the NQ. And we'll talk about our trading method. So, as you know, we only use one indicator. It's all we need. You can see how it tracks the market very nicely. It separates, it gives us a line here, which divides the bullish market sentiment from the bearish market sentiment. When the market started off this morning, we were up quite a bit. We ended up over 420 points today. So we had a bias to the long side, even though the market did come down quite a bit today. This is the open right here. We're in Pacific time. This is 6:30 California time. As soon as the market opened, it locked in a low turn here, moved up, and then locked in a high turn here. This is very common. So we have two locks, both straddling the 50-yard line. The market is trying to figure out whether it's going to go long or short. It's straddled the line here, right in between. Now our indicator is showing that it is coming down toward the 50-yard line, the neutral zone. It breaks our fast and low indicators here, the brown and the blue, coming down to the 50-yard line. So because there's a high and the low in place, once it hits the 50-yard line, we can take a trade in the direction of the whatever in direction of the low or the high, wherever the if we're going bearish, we're looking for the low. If we're going bullish, we're looking for the high, because the idea is that the market or the indicator of the market is going to search out and repeat the low and the high. It's in search of the low and the high, as you can see here. This is the basis behind our trading. The market repeats itself. It continually retests. So we take a trade off the 50, which is how we trade right here. And it's moving down toward this area. It's coming down toward this area. It stops here. So we got out with a few point gain. So 304, we made $200 in this trade, 4 points right here. Once the red indicator, which is tracking the market, penetrates the brown fast moving average of the indicator, we exit. Now here, it turned around rather quickly and looked to us like it was going to test the high, because it didn't even fully test the low, so it would make sense that it would go ahead and test the high. But it didn't. So we got in here at the 50, not knowing, and we exited here for a loss. Not much though. We only lost 5 points, so we gave back our 200. We took a $250 loss. We're down $50. At this point here, the market's turning, but we don't take it off this 50 because it's getting to become very choppy. So we wait to see if it is truly going to come down to here. Again, we're always interested in testing and retesting of the highs and lows that the indicator put in. These are locked low, locked high. So we're wanting to trade in the direction of the low and the high. So once it penetrates the blue slow moving average of the indicator, we can take this trade south. 32.97 entry, and it comes all the way down to here. Now, this is where we were anticipating it would come to, which is right here. So if we got out of 32.90, that would be a legitimate trade right there. That would have given us 7 points right here. But as you know, we also trade with a trailing, a runner. So if we had traded down to the here, we could have done a second running contract to break even, stop, which would have been up here at 90, and we'll let it run down over to here. And we would have gotten out when the red indicator penetrated the brown line, which would have been 32.78.75. That would have given us another 10 points on this trade. Now the market, the indicator has gone below here, which is very significant. We had to go all the way back over to here to see where that was. Let me go ahead and put a line over here, because typically that doesn't happen. So we have to see where that takes us to. And it takes us all the way back here to a previous day. That's pretty bad. Okay, that's pretty serious retracement. So we were concerned about the intensity of this market move down. In any case, we were expecting that the market would test at least here, if not here. So once the red line penetrated the blue line, we noticed this huge bar. So something happened and we don't know what. We didn't look at the news, but something happened. But we don't take the trade here. As you know, we wait for the red line to reach the 50-yard line or the neutral zone. At this point, we made a decision. It was still reasonably early in the day. It was not too bad. It was 11:40 Pacific time, which was 2:40 New York time. So if we were wrong, we still had time to make up the difference if we were wrong. But we took a trade here in anticipation of the market at least getting to here on the indicator. We don't trade the market, we trade the indicator. So from the green line to here is not much. But we took this trade on the green line, as you can see above. Let me move this over here. We took that trade only to a little bit up, just a couple of bars. Well, actually, we took it up to over here, didn't we? Right there, which is where we felt was the top of this bar here, top of this part here of the red. And then we got out. Now, there was a little more market movement up, and we'll go ahead and take our white horizontal line and move it to the top here, which, as you can see, is the same as the top here. Not in terms of the actual market, but in terms of our indicator. So the market moved higher than this piece. It went up to here. Not much difference in price, but it still moved higher to complete an effort to move itself back up to here. Let's go over this one more time. Let me take this out and put it back to the beginning of the day so you can see. The market starts here and has a locked low because the red line is penetrating the blue on the way up. This creates a locked in low. This is the low. It moves up beyond the 50, doesn't have to move beyond the 50 to create a locked high, but it does. It straddles the 50 and puts in a locked high up here. This becomes the locked high. Okay. Now the market moves back down to the neutral zone, and we took the trade going below the neutral zone, expecting it to move here, which it eventually did. In fact, it moved beyond. So we got our move down to the low of the early morning, which was here. Then once the market hit neutral, which meant basically the thinking is when the market hits the neutral zone again, it's done with the down move. It's exhausted the down move. It's tested the down move. So the market's able to pull back to the neutral zone with an anticipation of some type of a bullish move up. It's equalized itself of all the sellers to go back to the neutral area. It's tested the low here from here. And now we want to see some type of test above the 50, which would be either here above the 50 or here. And it so happened that it tested here. So we got into two good trades here and here, all based on our indicator. Take a look at our this is the NQ, and actually the NQ had a great trade as well today. Same exact situation as the ES. Came up in the morning, came down here to test the low, which it did right here, tested the low, continued going lower. Sometimes, these are legitimate trades. We don't like them because they could snap back. We call this continuation trades. From the neutral zone, the market moves down, doesn't move back up, doesn't even penetrate the blue line. Instead, it again penetrates the fast indicator line of the brown dotted line and moves down further. So this could be a legitimate continuation trade, but they can also snap back on us like this. So we're not that excited about them, but they are legitimate trades. We'd rather trade off of the 50, which is a neutral area. It's a very powerful area to trade. As you'll notice on the indicator, this is the neutral area and this is the neutral area. So they're very powerful. As you can see, they make moves off the neutral areas of our indicator. So here we're trading off the neutral area on the NASDAQ right here, made a very nice profit on this trade here, as we did in the ES. Very nice profit. In fact, let's see here. This happened at 11:55, the late afternoon trade, or it's actually a late morning trade here in California. And this trade happened at 11:40. So we had two trades today around the same time. This one traded at 11:40, and that was the ES, and the NQ. Same trade, same setup, but it started at 11:55, at almost at 12 noon, just at the end of this bar. I think we took that trade here. So there was a 20-minute difference, which was nice because we caught both trades. I'd like to move over here for 1 second to the QQQ. You don't see it, but we took a nice trade today on the QQQ. We took an options trade. I'm going to go over this options trade using our indicator, showing you how we do it very quickly. When I see movement like this is telling me, let's put the line over here so you can see this, because we can trade options our indicator on equities. So here, this market, this move of the indicator moved up here, which is sufficient to replicate. In other words, it's like a wave. The wave pushed up high enough to consider this to be a full replication. Therefore, when the market came back, when the indicator came back to neutral, we had an opportunity, a legitimate trade, to go south or short with an expectation of coming down to here. If you can't see that, I'm going to put a vertical bar up. Right there. So that would be the low of this move down in the indicator. So here it is, it's testing the high over here, hits back, comes back to the neutral zone. And so we took a short by using a put option here. We took the 270 short. This is 270.27. I think it was right here, 270, 269 almost, just shy of 270, and we went short right here, or we bought the put. Now the put we bought expires on Friday, so it's a very short-term put with very little time left. So it's going to act very sensitively to the market. And our expectation was that it's going to come down to here, which it didn't. So, but it almost came down. Let's see here. Oh, I'm sorry. Okay. So actually we didn't take it here. I think based on the NQ movement, we took it here at 269.36. We went short 270 and we had a very nice move down. So it didn't quite hit here, which means that there could be some unfulfilled movement still to come down to here. Okay, in other words, it didn't come down quite deep enough as it did up, because if I take a horizontal line right here, you can see it doesn't quite get down deep enough, which leaves some doubt that that the down move hasn't really exhausted yet. It has room to go down further. So we took this move here on a put. We bought the put and it was a 270 put, and it came down, the price of the QQQ down to 268.18, 267.89 and a low. We got 2 points. We bought we had 5 contracts. We made over $500 on this move here. And we got out because as you know, if the red line penetrates the brown dotted line, we exit, even if it hasn't come down here. And it did come down further, but we didn't take this part of the move. We got exited right here and we made over $500 on that option trade. If I recall, the option we got in at $2, I think it was it 160 or $2? So once $2 or 162, yeah, we got it at 160. So that would be, I guess $800, because it cost us, we got 5 contracts, we got an $800, we made over 500. It was a great trade. So the indicator works great for option trading as well. This is a 5-minute time frame. So I'll show you how we do that as well. If you come into our room, there's some nice option trades to be taken as well. That helps to juice our profits. Even though we didn't put it on our website, that option trade, I'm just showing you that we took that option trade. So let's get back to our other screen here for a second. Oops. Share screen. Right here. Okay, so we updated our trading for the day. Let's see. This is not the, here we go. Oops. Give me 1 second here. Make sure we get this done. Okay, here it is. So we updated our trading as of today, 11/2. We added another $450 on there, even though we made close to 1,000. We didn't show the option trade. And as you can see, we have a total for October of $3,670. So not too bad. Try to keep consistently profitable. We trade both the ES, the NQ. And let's get over to here. So if you want to come into our trading room, come to our website and take a 7-day free trial. Now we're looking for serious traders. You can read through our trading philosophy, our trading discovery, and we're looking for good traders who really want to be successful. It's worth reading our trading discovery. We've been doing trading for 30 years, and it would be silly to say it, but I have seen it all. So I have some experience here. I've been trading full-time for 30 years, and I have some good experience, and I have a good idea of how the markets work. And we do have a unique indicator that no one else is using. And if they are, they're not using it the way we are. So if you really do want to learn how to trade successfully, let's see here. If you really want to learn how to trade successfully or learn a system that is a successful system, if you're tired of getting hammered, tired of getting whipsawed, you know, if you're looking for a good trading system, then you need to come and check us out. We don't use market profile. We don't use lagging indicators. We don't use order flow. We do have a different approach to the markets, and it's very successful, and we'll show you how to use it properly. You know, everyone needs a good system, and then they need training on a good system. So we're going to offer both to those who come into our room. So you'll see what a really good system looks like, why it's a good system. In one sense, it's kind of like playing chess. You know, it's what's the next move, because the market is anticipating the next move. There is anticipation of the market because the market moves in impulse waves. So it's always kind of going for the next move. We have to be anticipating the next move. And so our indicator helps us set up for the next move and tells us where the market's going to. And if we're wrong, we have a dynamic stop loss that's built into the indicator that gets us out quickly. And usually if we're wrong, the indicator gets us back in correctly on the next move, and we make up the loss, plus we make some profit. So I would say that for anyone who's losing, which is most of us, and I got to tell you, I've talked to so many traders and I've seen so many programs out there, and traders are smart people. Traders are not idiots. Traders are very, very, very bright people. they have algorithms and they figure out this and that. They manage money. Anyone who manages money is a serious person, whether it's your own money or a hedge fund. There's lots of money and you could lose it or you can make it. So people in the trading business who are very competitive, they go to great lengths to develop a system that is foolproof as much as possible. And so sometimes you have these A1 artificial intelligence programs, which I say keeps learning and learning, learning, learning. Quite frankly, I think that's a little bit of BS. Our indicator that we use doesn't keep learning, 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 because it tracks the market. It knows what it's doing. We don't need A1 artificial intelligence. We don't need a market profile, because market profiles are changing. You know, in a market profile, you have the higher value area, the lower value area, and the value area. But unfortunately, the value area keeps changing during the day. And so everything's changing like quicksand, even in a market profile. So, you know, 1 minute, the market, the value area is here, then the market goes below the market value area into the low value area, which also changes, you know, the value area. So how can you trade if everything's moving? That's the problem. You have too many moving pieces. In our indicator, you have a constant. You have a 50-yard line. You have a bull and a bear demarcation in the indicator that does not change. The market moves around it. So you have a constant. So we don't use market flow. Market profile. We don't use order flow because order flow is very deceiving. People try to use order flow to pick off these big trades and try to mimic them. And you don't know anything about iceberg orders or the tip of the iceberg, or the next order could be coming in and negate the big order. It's very hard to trade with order flow. Sometimes you get lucky and you get in early, and a lot of times you don't get lucky. Who has the capital to trade like these big guys do? You know, you have to have a lot of capital to withstand a drawdown with order flow. And order flow is hit and miss. You know, you don't really know what the market's doing with order flow. You're just trying to copy what they know. And there is something to know in the markets, and we teach that. So our indicator follows the impulse waves of the market, and it decides whether that impulse is a bearish move or a bullish move. So there is a way of trading the markets successfully. And bear in mind that the markets move sometimes with these big movements, these big bars. You've seen them, and they just make everything haywire. Because when you get a big bar movement, you don't know what's going on next. Oftentimes a big bar movement, then you can have a whole bunch of small bars after that, and the market hasn't moved, and all of a sudden it can move down against you. These big bars can create havoc in a trader's life. So you really have to know what is bullish and what's bearish on that day. You have to have an idea of what's bullish and what's bearish. Where is the market bullish and where is it bearish? And you cannot see that through market profile, order flow, or indicators. This is a very unusual observation that we have into the market that tells us when the market is neutral. And you cannot look at the market and know that. The indicator tells that to you because it's a smooth algorithm. It smooths out a certain approach to the market. And so basically our indicator is an algorithm. It is an algorithm, but it's an algorithm of an indicator, if that makes any sense. All right, I love talking, and some of you might appreciate what I just said, but yeah, you want to come in and check out our free trial. It's worth it. You know, I think if you come into our room and you see the way we trade, there's a very good chance you're just going to stick with us, because we make sense of the market and every single move the market makes. We know what the market's doing. We know where it could potentially go. We know when to trade the market. We know when not to trade the market. It's hard to find a trading system that's better than what we have. and it's very, very inexpensive. So this is really an introductory price. We're keeping it here. Once we have, a nice group of traders, we may grandfather this price for those that stick with us, and for those that want to come in after that, there'll be gradually raising of the price. Because if we are showing a successful trading system and our traders are successful, we have something of high value that no one else has. So we have a right to charge more. And if you're charged $300 a month or $500 a month and you're making several thousand a month, you're not going to complain. But right now it's $199, so it's a steal. I would say, come on in, check us out. If you want to call us, you can call us or email us or send us a message. Thanks for listening.